Hello.
Today, we are focusing on a single stock that has just been generating some incredible momentum.
Absolutely. We're talking about First Majestic Silver Corp, ticker AG.
And the question that seems to be on everyone's mind is, is this stock headed to $25?
Well, the timing is perfect to ask that.
Yes.
We are dissecting an analysis report from January 10th, 2026, which asks that exact question.
And right now, the stock is trading at what, around $18.91?
Just cents away from its 52-week high of $18.98. It surged over 5.5% in the last session alone.
Okay, let's unpack this. The analysis lays out what it calls the perfect storm scenario for AG.
It does.
It's not just a technical bounce, it's a narrative built on two massive simultaneous catalysts.
Exactly. The first is a record-breaking rally in the price of silver itself.
Okay.
And the second is First Majestic's own massive strategic expansion in its production.
So our mission here is to pull apart these two forces, understand them, and figure out if they really justify that bullish $25 target.
And maybe more importantly, the premium valuation the stock currently has.
Right. That intersection of the macro and the micro seems to be the core thesis here.
It is.
We have to start with the macro because that's the raw energy driving everything else.
And if you look at the precious metals market right now, silver is just dominating the headlines.
I mean, the numbers are pretty staggering.
They are. Over the last year, silver has rallied approximately 170%.
Wow.
It hit a record high of around $83.60 an ounce in late December, and it's now consolidating, holding firm around that $79 to $80 level.
That kind of move, it just screams structural change, not just a blip on the radar. So why are we seeing 170% growth in just 12 months?
Well, because this isn't just your traditional inflation hedge run. I mean, that's part of it, of course. Concerns over monetary policy always drive capital into hard assets. But what's structurally different this time are the industrial demand tailwinds.
So you're talking about things like solar panels, 5G technology?
Exactly. Solar, 5G, electric vehicle components. Silver is absolutely essential for all of them.
So we have two forces, financial fear driving investment and the green energy transition driving industrial consumption. And they're both hitting at the same time.
Precisely. Unlike gold, about half of all silver demand is industrial.
Right.
So when you combine tight supply and mine output hasn't really kept pace with this accelerating dual demand profile, you get the fundamental ingredients for what analysts are calling the silver supercycle.
And this leads us to the most audacious claim in the analysis, the $100 silver price thesis. What makes analysts think this run isn't just stopping at 80?
That target is rooted in a fascinating mix of fundamentals and technical chart patterns. Fundamentally, they argue 80 is still undervalued relative to gold.
Okay.
But the timing aspect is purely technical.
We've seen veteran traders like Peter Brandt mentioned in this context. What are they seeing on the charts?
They're flagging what are known as technical flag patterns.
Okay, so break that down for us.
A flag pattern forms after a huge, sharp vertical move, like the run from $30 to $83.
Right.
Then the price consolidates sideways in a tight channel. That's the flag. And the implication is that this consolidation is just a pause before the next major upward move.
So if the pattern plays out, $100 silver price in 2026 is a real, technically plausible possibility.
It is.
And that brings us right back to First Majestic Silver. How does a $100 silver price directly translate to that $25 stock target?
In one word, leverage. AG is one of the market's purest silver exposure plays.
Because their mining costs are relatively fixed.
Exactly. So a massive increase in the selling price, say from $80 to $100, doesn't just increase revenue by 25%. It can double or even triple the profit margin on every single ounce they mine.
And that's why the analysis suggests if silver hits 100, AG's stock could easily push well past that initial $25 target.
That's the thesis.
That makes perfect sense. The macro shift dictates the potential, but that massive price surge is almost like a ticking clock.
Right.
If AG wasn't positioned to shovel that metal out of the where their corporate strategy comes in.
This is the second leg of that perfect storm. The macro environment gives the opportunity, but the strategic execution is what capitalizes on it.
And here's where it gets really interesting. The acquisition of Gato Silver, ticker GATO. The timing is described as just impeccable.
It truly was a masterclass. First Majestic completed the acquisition just before silver prices exploded past $80 an ounce.
So they didn't just buy growth.
No. They bought a low-cost producer poised to print massive profits immediately as the cycle matured. It's not just about adding ounces, it's about optimizing their cost structure right at the peak of the rally.
And we can actually put some numbers on that growth, which is vital for this whole bullish case.
Absolutely. The report quantifies the immediate impact. The Gatos deal is expected to increase AG's annual output by roughly 33%.
Which is about 9 to 10 million silver equivalent ounces annually. A huge boost to capacity.
It is.
But I want to dig into that strategic part you mentioned, the low-cost aspect. Why was Gatos considered so much more efficient?
This is critical for their margins. When you evaluate mines, you look at the all-in sustaining cost, or AISC.
Right.
AG historically had some older mines with higher operating costs. Gatos Silver brought in newer, high-grade assets with lower expected AISC.
So by integrating these, their overall cost to mine an ounce of silver should drop.
Significantly. And at $80 silver, every single dollar you save in sustaining costs flows straight to the bottom line. It just maximizes the leverage to the commodity price.
So they got 33% more output, and it was higher quality, higher margin output at the perfect moment.
That scale and strategic timing is what the report labels a massive value driver. It creates this fully exposed bet on the silver supercycle.
Okay, let's pivot now to the scorecard. Because strategic moves and high prices only matter if the company itself is financially sound.
And the financial turnaround, especially over the last year, has been dramatic.
We're seeing revenue up nearly 95% year over year, hitting approximately $971 million. I mean, nearly doubling your sales is a powerful metric.
And that operational leverage translated directly to the bottom line. The company successfully swung from losses to posting a net income of about $68 million.
So this rally is based on real earnings, not just speculation.
That's a key validation point.
Yeah.
And what about that rare safety net the analysis highlighted?
That's referring to their cash position, right?
For a capital-intensive industry like mining, cash is king. The report confirms First Majestic is net cash positive.
Meaning their liquid cash reserves are greater than their total debt.
Exactly. And that is so important right now.
Why? What's the strategic advantage there?
Well, miners are constantly battling high capital expenditures. Companies that aren't cash positive often have to raise expensive debt, or, worse for shareholders, issue new equity.
Which dilutes their ownership stake.
Right. Being net cash positive means AG can self-fund its future growth and weather short-term dips without needing to access that dilutive capital. It's resilience.
Fantastic. So we have the macro tailwind, the growth engine, solid financials. Now, let's talk technicals. Where does the chart say AG needs to go to validate a move toward 25?
We are right at the door of the most critical technical barrier. The report pinpoints $19 as the key resistance point.
Why is $19 the magic number for the traders?
Because a clean, sustained close above that level puts the stock into what technicians call blue sky territory.
Meaning there isn't much recent trading history above that price.
Exactly. When you clear historic resistance, you essentially run out of previous buyers who are just waiting to sell and break even. It reduces that overhead supply.
So it clears the path.
It opens the trajectory directly towards the next major psychological level, which for AG is $25.
Okay, that's a clear breakout signal. But what if there's a minor correction? Where is the support?
The analysis identifies strong buyer support at 1760, and below that, a second, very strong layer around 1680.
Given that massive 5% surge we just saw, investors are always nervous about immediate pullbacks. What are the momentum indicators telling us?
That's where the relative strength index, the RSI, comes in. The report suggests the RSI is likely approaching overbought territory on the daily chart.
Which suggests a bit of caution is warranted.
It suggests the price might need to take a breather. It doesn't guarantee a crash, but it means a minor pullback or just some sideways consolidation is probable.
And for long-term investors tracking this move?
That breather is often interpreted as a potential buying opportunity, a chance to get in before the stock re-energizes for its next leg up.
This all sounds overwhelmingly bullish. A company making all the right moves in a historic commodity supercycle. But we always have to look at the other side. Where are the risks?
Absolutely. And the primary caution flagged in the report focuses intensely on valuation.
It's expensive.
Very. While the story is compelling, AG trades at a significant premium multiple compared to its peers. The analysis uses strong language, stating the stock is currently priced for perfection.
And what does priced for perfection actually mean here?
It means its price-to-earnings ratio is elevated, but more importantly, metrics like its enterprise value-to-resource ratio are sitting substantially higher, sometimes 40 to 50% higher than its peers.
So the market is not waiting for $100 silver. It's already pricing that in as a done deal.
Pretty much. It's assuming the supercycle will be successful and that the Gatos integration will be flawless.
Which makes it incredibly sensitive if things don't go perfectly.
It is. That leverage works just as intensely on the downside. The analysis projects a scenario where if silver just drops back down to $70 an ounce.
Which isn't even a crash.
Not at all. It's just a modest drop. But it could send AG stock correcting sharply, potentially back toward that $15 level.
Yeah.
You are buying high leverage.
And we can't forget the corporate risk, the one AG introduced itself.
The integration risk. Acquiring Gatos Silver is a massive undertaking. Merging operations and cultures in the mining world is never seamless.
Right.
Any initial hiccups or unexpected costs could derail the stock's momentum, regardless of what silver is doing.
So we have this phenomenal macro story meeting an aggressive, profitable company. But that entire narrative is already baked into a stock that trades at a substantial premium.
Precisely. It's the high-reward scenario where every piece of good news is essential just to maintain the current valuation.
Okay, let's bring it all together. So what does this all mean for you trying to understand the full picture? The bullish case for First Majestic rests on 4 massive pillars.
Right.
First, the company is profitable with a strong $68 million net income. Second, they have a net cash positive balance sheet, which is a huge advantage.
Third, you have that massive production growth from the perfectly timed Gatos acquisition.
And fourth, it's all riding this overwhelming macro tailwind of the silver supercycle, which structurally targets a $100 silver price.
But ultimately, the report gives us this fascinating conflict. We know AG is priced for perfection, its valuation is stretched.
But we also know it's knocking on the door of that critical $19 technical breakout point.
And that intersection of valuation risk and technical opportunity is the defining feature of this moment.
Which brings us to a final provocative thought.
Yeah, and this is a question for you to consider moving forward. If the AG stock does break and hold above that critical $19 resistance level, will that technical confirmation of momentum outweigh the underlying risk of being priced for perfection?
Or is a $100 silver price the only thing that can truly justify the premium valuation AG currently commands?
The success of this whole move really depends on the successful delivery of that supercycle thesis.
That's a powerful challenge for every investor tracking this stock. Thanks for joining us.